The broadcast is now starting. All attendees are in listen-only mode.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Well, let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Monday, 15th day of March, 2021. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. On the days you're out of the office, away from the desktop, not to worry, point any internet-connected browser to cfrn.net/live. And there you'll find a live, real-time simulcast of the show as it unfolds. You just won't have access to the chat box. We also stream live during this broadcast on our YouTube channel, youtube.com/CFRN. We archive every show, so any day that you miss the show, just go to the YouTube channel. About 2 hours after the show, it's usually posted, and you'll have the show in its entirety. If you happen to be listening to this as a podcast after the fact, and you want to have access to both the video and the audio, you want to be able to see the charts, simply hit pause on your podcast player and point your browser to youtube.com/CFRN, and then you'll have the benefit of both audio and video. Let's open with a word of prayer. Heavenly Father, we thank you today for your blessings, for your mercy, and for your grace. Thank you for the beauty and the majesty we see in your creation. Thank you for the opportunity to care for the world you have made. We ask that your blessing would rest upon our team, our members, anyone in the audience live today, and anyone who hears this broadcast after the fact. We pray that you would give us great vision and enthusiasm for our work. Please bless the efforts of our hands, the bonds between us, and the influence of our work here today and in the future. Lord, as we plan and share together now, may you guide us by your Holy Spirit and lead us into all truth. In Jesus' name we pray. Amen. Amen. Happy Monday. Let me give you the numbers from around the world. These are the cash markets, or the indices as they're called. Starting here in the U.S., the Dow is down 61 points. The NASDAQ is up 12. S&P 500 down 7. And the Russell 2000 down 10. In the commodity basket, crude oil down 79 cents. trading 64.82 last. That's a drop of a little over 1%. Gold up $6.90, trading 17.2670 last. Silver up 25 cents, trading 26.17 last. In the Asian markets at the close, Nikkei posted a gain of 49 points. The Shanghai dropped 33. The Hang Seng gained 94. For the Shanghai, that's a drop of almost 1%. In the European markets at the close, FTSE down 33, DAX down 87, CAC down 26. That gives us a mixed day in Asia, a red day in the UK, and thanks to the NASDAQ, it's still a mixed day here in the US of A. The NASDAQ, the only one in the green, the Dow, S&P, and the Russell in the red, not by a lot, but in the red. With that, we can go to Michael and get a recap of what happened this morning in the live trading room. Garrett, I believe, is going to join us later in the show, probably about top of the hour, shortly thereafter. Michael, if you're ready, you can take it away. Okay, since Michael's not quite ready yet, let's go to a daily chart of the S&P. Now, we have rolled forward to the June contract. When we roll forward, that always creates a little bit of indecision and uncertainty in the markets. Some still trading the H contract, some trading the M. And on top of rollover, we also have the time change. Now, daylight savings time, 8 months out of the year. Mountain Standard Time, 4 months out of the year. So for 4 months, I am on Mountain Standard Time as God intended. 8 months out of the year, I'm on Pacific, which means the opening bell for me is 6:30 versus 7:30. 4 minutes, 4 hours, 4 months out of the year. So on the daily chart, we roll that to the M, and that changes things. If I go back to the H contract for a moment, we had a high of 39.59 and a quarter. That was the all-time historic high. 39.58 half. We couldn't quite take it out that day. And today we have a high of 39.57. Now that's on the H contract. But when we move it to the M, the previous high, 39.4775, 39.4775. We have a new all-time historic high for the June contract, 39.49. Today's high is 39.4775. So this is the number we'll be watching, 39.49. So we've adjusted our fibs. Now the 24% fib of the entire move up, which goes back to the low put in end of October, 1st of November. The low actually came in on October 30th. And based on the June contract, the new all-time high is here at 39.49. So price has support right below, and because we have this new high, 47.75 versus 49, this has been our last leg up for some time. Now we have a new last leg up. So we're going to take, let's do this. We're going to get rid of this one. Now for the entire move up. From the low to the high, not to this swing high. And I won't be able to grab that. So let's do it this way. So our Fibonacci price extensions from the low to this swing high to this swing low, that gives us, let's fix this.
I'm here, Dwayne. Whenever you're ready.
All right. So there's the 38, the 50, and the 62. The 38, the 50, and the 62. And then we've got fibs from this low to this high. So this 24% fib right below is support at roughly 33.81. And then we'll finish this up when I come back. We'll go to Michael right now and get a recap of what happened in the live training room. And when I come back, we'll go over the logic alerts, the concierge trade alerts, our bumpy start to the week. Again, when we do rollover, that creates a bump in the road. And then, of course, throw the time change in on top of it. There's another bump. So we got 2 speed bumps today. But we'll go over all of those when I come back. And again, Garrett's going to join us top of the hour or shortly thereafter. So, Michael, I've got you locked and loaded. Take it away.
All right, here we go. Good afternoon, everyone. Today is Monday, the 15th day of March 2021. If you have not taken a free trial with us and you want to take a free trial with us, go to the homepage here at cfrn.net. Right here on the homepage, it says free 5-day trial, no credit card required. Click on that. It's going to bring you to this page, eminitrainingschool.com. On this page, all that we ask for is your name, your email, and your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Okay. Now, the spreadsheet. If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today, as Dwayne was saying, was kind of an unusual day because, well, it's rollover day and it's time change day. So, I mean, we did okay anyway. But we really didn't have any news events today. The rest of the week, we have lots of news. You know, we have FOMC coming up this week, and you know, we have lots of news the rest of the week. But today and Friday, so okay, the next 3 days we have lots of news. But today and Friday, we don't really have much. But anyway, we made 35 ticks on crude, 30 ticks on gold, and 14 ticks on the ES. That put us at plus 825 on the morning session. Today it took 1 minute and 2 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 23 trades. So on the month now, we're at $12,145. That's over 11 trading days, averaging $1,100.04. That is 1 contract, 2 hours per day. Okay, so far this year, 48 out of 49 days, we've made our goal. And on the year now, we're at $43,630. That's over 49 trading days, averaging $890 per contract per 2-hour trading day. Okay, so let's get into what we did. Let's start out with the ES, since that's the one that really kicked our butt today. We'll scroll all the way back here to the very beginning. Now, I stepped in about 3 minutes early today. Okay, the time change kind of messed me up too, and my sleeping's not normal. And so anyway, I was in a little bit early. The first trade on the ES this morning was this down close right here. I missed that one. Too bad I missed it, but it was a nice trade. The next one was right here. We picked up 4 ticks. And you can see the ES got into this really choppy range where it whipped around a lot. And, you know, I had put in this level down here that I thought it was going to get down to. It took it a while, but eventually did. Then we had a break even there. Then we stopped out there and we stopped out there. Now, 2 stop outs in the row is unusual. 2 stop outs in the row in the same direction and you're doing something wrong. But these were stop outs in opposite directions. You see how it caught me here on this one going down, and then it whipped up and came back down, and it caught me on the attempt to go back up, and then it just went sideways for a long time. So I stayed away from it for a while, for about an hour, it looks like, right? And about a half hour. I stayed away from it. Then found we got a break even there and a break even there, and then right at the end of the session, I saw things start to light up here. And, you know, we broke out of all this chop and all this garbage down here. And I originally saw this just getting down here. 39.25 is what I was looking at. And then as it got down there, it opened up a little bit more. So I put a target down there at 39.24. And then it just started to open up some more. And I had put these targets in as I closed out the room this morning. This area right here on the upside for the pullback, which it just hit over here. And this area down here for the target area on the downside. So the pullback area was hit, well, about, what time is it? About 20 minutes ago. And it's gone back up through this weekly trading zone. So during the break, really, it went from this zone to this zone, then back up to this zone. That's a lot of movement. In, well, basically a half an hour. That was a lot of movement. But it made for some good trading. On the crude, we just go backwards today. On the crude this morning, crude behaved pretty well today, meaning it showed things and then it did things like it normally does. We started out with a break-even trade right there. Then our first trade right here, we picked up 9 ticks. Now I was showing this was an area down here and it got to it. This was an area down here and it got to it. I didn't write anything in for the next couple of spots here, but we picked up 9 ticks on the first one. Then we picked up 5 ticks on the second one to put us at plus 14. A break even there, then 2 ticks there to put us at plus 16. Then I missed this trade right here, but I did highlight the area down there that it should get to. Then things turned around and we picked up, went from 16 to 24. So we picked up another 8 ticks there. We missed that long. We picked up 8 ticks. Then we had a break even. Then we picked up 4 ticks to put us at plus 28. Then 4 more to put us at plus 32. Then 1 more to put us at plus 33. And then over here, 2 more to put us at plus 35. And that was where we wrapped up the morning session. Now on crude this morning, at the end of the session, there really wasn't much to go for. This was what I said on the upside right here, and it did eventually get to that. This was the downside, and it pretty much got to that while I was talking. This was the next downside level. I don't know if we're going to end up down there today, but that was that level. And you can see crude went right up through this and it just kept going during the break. There was some nice long opportunities here during the break. It got really choppy here right at the end, but the slingshot wasn't giving anything up anyway. All right, now the gold. Let's look at the gold on a little bit bigger picture for just a second. Yeah, these guys taught me a trick this morning. Okay, this was my ultimate level for the day, all the way down here at 1720. These were some levels that I had put in this morning, 21.9, 22.4, 22.7. So let's go back here. Okay, now we'll go back to the beginning of the morning session. Hold on. Here we go. All right, on gold, like I said, I started a few minutes early, so we entered this trade right in here. I was really just checking to make sure my DOMs were all working right and everything, but we did have a long opportunity, so I jumped on it. And we took our goal for the day on the first trade. We got 10 ticks on that one. We had a break even here. Picked up 4 ticks on this one to put us at plus 14. And then 6 ticks there to put us at plus 20. 2 ticks to put us at plus 22. A stop out to put us back down to 14. And then we missed a short in there. We had a couple of ticks here to put us up to. We stopped out to go back down to 14. We had a couple of ticks to put us at 16. Then 6 ticks to put us at plus 24. Sorry, that was 8 ticks to put us to plus 24. And then 6 ticks to put us plus 30. I think that's what it was. Then during the break, I had highlighted areas during the break. Like this is the up level, this was the down level. It had pretty much gotten to that while I was talking. And I'm still looking at 1720 on the downside, but it was given long opportunities here during the break. So, if you were trading gold, there was a couple of opportunities, just a couple. And they weren't easy to see because we had dynamic resistance in the way and the cycle kept changing color. But that said, they were there. Okay. Now, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, as I said, is 15th day of March, 2021. We made 35 ticks in crude, 30 ticks in gold, and 14 ticks on the ES. Put us at plus 825 per contract on the morning session. Today, it took 1 minute and 2 trades to get to the goal for the day at that point of $100 a contract, and we took a total of 23 trades. Now, these 2 trades was a break even on the ES and a plus 10 on gold. Okay, on the month now we're at 12,145. That's over 11 trading days, averaging $1,104 per contract per trading day. So far we've gone 48 out of 49 days, getting our goal this year. And on the year now we're at $43,630 per contract. That's over 49 trading days, averaging $890. That is 1 contract, 2 hours in the morning session trading. Okay. Now, if you've not taken the free trial and you want to, go to the homepage at cfrn.net. Right here on the homepage, it says free 5-day trial, no credit card required. Click on that. It's going to bring you to this page, eminitrainingschool.com. On this page, all we ask for is your name, your email, and your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Okay. Really do send us that information so we can do one-on-one training just for you. We do really do that. Okay. All right. With that, I'm going to wrap it up for the morning session. I'm not the morning session. I'm going to wrap it up for this. I'm going to send it back out to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. And now I'll get ready for my afternoon session. Dwayne, if you are ready.
Yes, sir. I am ready. Recap of the recap.
Today it took 1 minute and 2 trades to get to $100 per contract.
Good job. Excellent job.
Okay.
So, being rollover and time change, I know that the whole time change thing, it only really affects people who don't do daylight savings time. But do you notice anything different or unusual today? Rollover itself usually brings a couple of speed bumps on the highway.
Not really. It was okay. Yeah, everything went pretty smoothly. We rolled over on Fridays, so everything was pretty good this morning.
Okay. Alrighty. Well, excellent.
Yeah.
Now and I just talked to Garrett again, guys. He is going to join us at the top of the hour. Okay. So we'll be ready for him. Now, we have 2 types of alerts. We have the Logic 247 alerts. The alerts are based on logic, and they come to you via our private Telegram channel 24/7, round the clock, from the moment the markets open Sunday night at 6 p.m. Eastern till they close Friday afternoon at 5 p.m. Eastern. So most traders are waiting on Wall Street to open Monday morning, 9:30 a.m. We go to work on Sunday night when the global markets open at 6 p.m. Eastern. That used to be 4 p.m. Sunday afternoon, and now it's 3 p.m. In the afternoon for me. And so this afternoon, at 6 p.m. Eastern when the Globex markets open. That will be 3 p.m. my time versus 4. And I'm saying this a lot because I have to get it ingrained into my psyche so that I stay on track. So we've issued a total of 14 alerts, 1 never triggered, waiting on 3, 10 actionable, which 2 have been stopped out. It's 20% of the actionable alerts. Now, alerts on, or the risk on the alerts is different from the room. In the morning, Michael teaches you the methodology, the strategy, the underlying principle upon which everything we work, how everything works. There's an 8-tick hard stop on everything, all markets. Every market, every trade, he's using a 4-tick range chart, which is a faster chart, obviously, than a 30-minute chart. Now, it's not a 4-tick chart. That would be too fast to trade. But a 4-tick range chart, which you just saw his charts, every candle is exactly 4 ticks tall. And on the S&P, 4 ticks, as we know, is 1 point. So it creates some nice symmetry. We use that faster time frame so that you get to see a lot of trade setups over the course of the 2-hour session each day. If we were using the larger time frame, like a 30-minute in the live training room, you might only see, 1 or maybe 2 trade setups over the course of a day. So with the alerts, $300 maximum risk, less when possible, based on market structure, and a simple 3-step method that we teach all of our traders. Okay. And last week we had an unusual week in that the total for the week was, well, I'll show you that in just a second. This week we're right at 20%. That's what we've averaged over the last 137 weeks. 20% of actionable alerts do get stopped out. Now, based on that $300 risk profile. Now, if I scroll over to this window like this, last week was a busy week. Week 136, we had a total of 100 alerts. Now again, these could come at 2 a.m. or 2 p.m. We got traders around the world, so our day session is their night session and vice versa. So we had a total of 100 alerts issued, 22 never triggered, 78 actionable. 11 of those were stopped out based on not risking more than $300 per contract per trade. So that's 14% of the actionable stopped out. So that was an unusual week. This week so far we're on target with 20%. And so last night, coming out of the gate, the first alert was the S&P. The way you read it, this is alert number 6,850. Over the last 137 weeks now, in week 137, this is how many alerts. And every one of the alerts in the Logic 247 channel is a trend trade as defined by a 30-minute chart and our indicators. I'll show you that in just a moment. It's the S&P, the June contract. B is buy or be long. T is initial target. You got potential resistance, which could be considered target number 2, target number 3, target number 4, and final trade to target. Every alert has a final target, which is the weekly trading zone above if it's a long, and it's the weekly trading zone below if it's a short. And so the Dow is a stop out, red X. When you see Z's, that means it never triggered. This was a Russell. The idea was to be long 2367. Price just never got to 2367, so no trigger. So still waiting. Here's an alert on crude oil, GCLJ, to be long 65.95. Initial target, second target, third target, final trade to target. Now the weekly trading zones, that's what WTZ stands for. Those are issued every Monday morning at 6:15 a.m. Eastern to all of our members. We've been publishing the zone since December 14th of 2009. So on Sunday nights, we're still using last week's zones. And early in the week, Monday, Tuesday, into Wednesday, it's a good idea to keep a list of the previous weekly zones, even if you've already put the new zones on your chart. Because if you got too many lines on your chart, it can get a little cluttered and confusing. So some people color code them. I've reduced it down. Like weekly trading zone is 6725/6730, but on my chart, I just put one line, 6725, knowing that it's 25/30. Then here was a long on goal, 1731 to 32, potential resistance at 35. Next target, so target 1, target 2, target 3, final trade 2 target. Silver, 2630 long, initial target 2632, 2 penny move in silver, $100. The initial target is designed to provide that $100 per contract per trade, as Michael teaches you in the room on that range chart, where we're using an 8-tick hard stop on everything. Here's a short on the Dow, a stop out on crude, a short on gold, short on the S&P, a short on the Russell, and we're still waiting and still waiting. Okay. Now, as a complement to the logic alerts, which come out around the clock, we have also the concierge trade alerts. Those were our first alerts, which we've been publishing, well, I guess 7-8 years now. And though these don't come out around the clock, these come out once per session. It's a static report designed to give you forward guidance for the entire session. The best way to handle these is when they're published, you put 2 lines in the sand, one on the long side, one on the short side. If price starts trending up towards 39.52, that's bullish, so you're looking for long setups on the way to 52. Once price gets to 52, it will usually turn out to be like an iron curtain. In other words, price will reverse there and head the other direction. Or if it can trade above it and hold the pullback, then above 39.52, we're only looking for long trade setups. And if price drops or starts dropping once this is published towards the short number, 39.19, that's bearish. So we're looking for short trade setups. And then once we hit 39.19, price will again either halt, reverse, head back in the other direction. Once it drops below 39.19, then we are only looking for short trade setups. So the logic and the concierge kind of go hand in hand. The logic alerts are based on current price action. That means whatever's happening right here, right now. The concierge alerts are based on historic price action. So when you have 2 fingers pointing at the same important price, important area, current price action and historic price action, that's always a good place to really slow it down, take a good look, because that's where you'll usually find the highest probability, lowest risk trade setups. Now, we normally go straight to the S&P daily chart, but I want to go over here to the NQ daily chart, because we haven't really talked about this. The NQ on the daily, we had a bearish cross back on February 26th. Now, price flows on a daily chart the same way it flows on a 1-minute chart. From support to resistance, back to support, to resistance, to support, And then once we get below that green line, which is called the BBC, stands for bull bear cross. When price crosses above that line, as it did here, okay, we get this bullish cross. The CFMA1, that's the red and blue indicator. I refer to it as red and falling, bearish, or resistance, blue and climbing, bullish, or support. And so we get a leg and a retracement, a leg and a retracement, a leg and a retracement. And as you can see, the pullback holds more often than it doesn't. Leg, retracement, leg. Now, this was President's Day. Wall Street was closed. New all-time historic high in the NQ, just like closing high, just like in the S&P. The following day, when Wall Street was open, which was February the 16th, a Tuesday, we had a bearish engulfing candle just like we did on the S&P. Now, it's called an outside day or bearish engulfing. The high is higher than the previous day's high. The low is lower than the previous day's low. Bearish engulfing. That is one of the, it is my most important indication of a coming reversal. It has to be in the proper context, and proper context simply means that after a nice up move, now whether you're on a daily chart or 30-minute chart or 5-minute or 1 minute, everything, you've probably heard that markets are fractal in nature, but maybe nobody ever told you what that meant. What that means is what I said earlier. Price flows from support to resistance, back to support, back to resistance, back to support, over and over, again and again. Okay? Everything that we teach is fluid across all markets and all time frames. So on February 22nd, we had a candle close below the BBC. We put in a swing low on the 23rd. We had a retracement back up to the BBC. The high of this candle was 13,337. You can't see it because it's behind the step line there, 13,337. But leg, retracement, leg, retracement. Now that we're below the BBC, you can see that how the pullback holds more often than it doesn't. The same is true here. Leg, retracement, leg, retracement. When we pull up to the BBC, we expect that to be good resistance. So far it has been. Right now, price is trapped between the BBC and the step line. The BBC is resistance, step line support. If price trades below the step line, okay, then the next area that we would expect there to be good support would be here at blue and climbing. Remember, blue and climbing is bullish, red and falling is bearish. And so the high probability move from here, if we don't find support at the step line, would be a couple of red candles. We meet up with blue and climbing, and then the market has to make a decision. Okay, is there more selling pressure in the order flow or more buying pressure? Obviously, there's been more selling pressure than buying pressure since February 16th, although we've, even in a downtrend, you will have legs and then retracements, and then legs and a retracement, a leg and a retracement. So really this is a decision point here. If we can get above this swing high, then the area that we would look for to find resistance overhead is right there. Got two things going on. This swing high and where the bearish cross took place. That's an important price, important area. Okay, so we'll stay tuned into this, but I just wanted to bring it to your attention. because the dynamic between the NQ and the S&P is quite different. Now, we had a bearish cross back here. Let me open this up. Let's see, we've got I see the one thing we're missing here. I don't like to get too much stuff on the chart, but let's get rid of this trend line. It's not serving us any real purpose now. Let's take out the things we don't really need. Let's clean it up a little bit. There. Okay. So the high here was 39.47.75. The high here was 49. Today's high is 47.75. Same. 47.75. That's the same as today's high. Intraday high. This is still the all-time historic closing high. But we have a new, because we rolled the contract forward, we have a new intraday high. So we're going to take our fib tool and we're going to go from this low to the new high. Okay. So the entire move up, our 24% fib is at 37.77, which doesn't exactly line up with the 62% fib of the last leg up. Now, this is the last leg up that we've been working on, but because rolling the contract forward gave us a new this was the all-time historic high, but on the M contract, this is the new high. And so 24% fib of the entire move, and going from this low to this high, that gives us a 24% fib. That's the 24% extension. This is the 24% fib. Now the price extension, we go from the low to the high to the retracement low, and what that does is that projects into the future. We've already overcome the 24%. So the next resistance, if we can take out the all-time historic high, looking left you won't see anything because we've never been there before, but if we take out this all-time historic high, then the next resistance is at 39.90.49. So we'll call it 39.90. Okay. Our highest weekly trading zone for this week is up at 4020/4021. So we've got our fibs on the chart now for the entire move. We've got the fibs for just the last leg up. Okay. I'm going to put those in again. Okay, that's real clean chart. Okay, so the entire move, there's your 24% fib. That's the shallowest possible Fibonacci retracement where we expect the market to find good support. And as we've learned in the past, when price hits a 24% fib, it's usually good for a nice bounce. Like here, this bounce took us from, now at the time, this wasn't the 24% fib. It was slightly different because remember, this new high is only by a couple points, but we have to honor the new high. So when price hit that 24% fib, institutions are watching daily charts more than they're watching 5-minute charts and 30-minute charts. So when you hit a major fib like this, you can expect a pretty nice bounce. And so from this 37.77 area, it bounced us up to 39.01. Resistance sent us looking for support, and this is where we found support, right here. Now, why is this the all-time historic high? Because on this day, when price hit 39.49, nobody was willing to pay 39.49 and a quarter. There were orders in the DOM. There were people trying to sell 39.49 and a quarter, but nobody hit it. In other words, buyers stopped buying. And when buyers stop buying, sellers come in. Although they didn't do a lot of damage, and then this was Friday's candle, and now this is today's candle. So we've traded down to the step line, which we expect to be good support when we approach it from above, and it was, drove us back up. The big question that we concern ourselves now with, are we going to have a chance to trade this window of opportunity, which would be about 39.55 to 39, we'll call it 75 to be conservative. It's a nice 20-point window. Or are we going to struggle here if price gets below the step line? Now we've got blue and climbing and the BBC, they've come together at 38.66. Price drops to there, we definitely expect good support there, and that should give us a really nice bounce. Okay, will it give us enough of a bounce to take out the high? So price can only do three things: go up, go down, go sideways. We love to go up, we love to go down. What we don't like to do is trade in a sideways market, because that's where you get beat up. You can have, when you've got a nice trending market, you can put together days and weeks and months, and if you try to trade in that sideways market, that congested market, where price gets above the VVC and then below and then above and then below, you can see whatever profits you have in your account evaporate pretty quickly. So our indicators do a pretty good job of not only helping you to find high probability, low risk trade setups, but once you learn to read them, they can help you stay out of the areas that really aren't conducive for trading. So we know where resistance is, we know where support is. Support's at 39.10, resistance is at 39.49. Armed with that, we're now ready to go to our smaller time frame, where we actually put on and take off trades. So again, 39.49, resistance, and then support, we'll call it 39.10. And if we get below 39.10, and we'll call this 38.67. Okay, so now we'll go to our 30-minute chart. Okie doke. And again, remember, we're on the M contract. Okay, now that is last week's weekly trading zone, 39.30/31. These are previous weekly zones, and now this goes back to the 10th. But see how price consolidated at that previous weekly zone? So that was pretty important. And then this previous weekly zone, we consolidated again. Now I'm going to go ahead and pull this one out of the mix. Okay. Now the next weekly trading zone overhead is 39.49. 46/47. And we've got a nice double top there. Okay. Now the session opened last night. That candle right there. Slightly higher gap open, which has filled. It wasn't enough of a gap for me. I didn't put out a gap fill trade on that. Now the Concierge Trade Alerts. If you didn't grab a screenshot and you want to, please feel free. Oh, and there was a mistake made here. It was brought to my attention, and thank you for bringing that to my attention. I mistyped that. So, CTA on the long side last night, 39.52. Price never got there. And let's put this line right here. Okay, and we'll get rid of the arrow. So that line marks Friday's close, and here's the Sunday night open. So we made a run, pull back to last week's weekly trading zone. It wasn't the highest weekly zone, it was the next to the highest weekly zone. Now because that's a last week zone, I'm going to make that yellow. Okay. Now, so price has traded below that zone. We're below the BBC support. See this bullish cross that led to an extended move? When price revisits an area, whether it's a bullish or bearish cross, when price revisits, if it's a bullish cross, when price gets back to that area, we expect it to be good support. And so the alert we had on the S&P this morning, it highlighted that, okay, as potentially good support. Now we also have a this week weekly trading zone at 39.12/13. Okay, so last week's zone, a couple weeks ago, but I'm going to leave it on there for a day or two because on Friday's session it was important. So as long as it's important, I want to know about it. Now, this was a huge red candle coming down. Kind of looked like the bottom was falling out. But when it got to this important price, important area, where we had the bullish cross, now we see this again and again, over and over. So what's the next high probability move from here? Leg to the downside. When we approach the BBC from below, we expect that to be good resistance. Now the CTA on the short side last night was 39.19. Now remember the CTA numbers, the Concierge Trade Alerts, those are based on historic price action. The Logic 247 alerts are based on current price action. So the alert this morning was a logic based on current price action, and this is the CTA from last night, which was to sell. CTA sell 39.19. $39.19. We put in a low at $39.13, so that's 6 points. $50 a point. It's $300 per contract traded. Now, if price can push through the BBC, if there's enough buying pressure, if there's more buying pressure than selling pressure in the order flow, we're not going to immediately get long, because this bearish cross has the potential to be good resistance. Just like the bullish cross became support, this bearish cross can become resistance. And then, if we get through that area, this swing high, also potential resistance. So before getting long, I would want to overcome this area, and then I would want to trade this window of opportunity, and we would most likely have an alert there. Okay. All right. So Garrett's going to be here in just a few minutes, so let's jump over to the Dow. Okay, last night the CTA number for the Dow was 32,805. And this is an example of 32, that iron curtain I was talking about. We hit 32,805. We managed to make it up to 22. Okay, the Dow pays $5 a point, so it takes 20 points to give you that $100 per contract. So price was turned away, and then we tried it again. This time we made it to 32,820. This was 22. This was 20. So we got a high, and then we got a lower high. Now we've got a bearish cross, just like we had on the S&P. We've pulled back up to the BBC. The next high probability move would be to the downside. We don't trade that yet. We've got to wait for the market to show that it's found resistance, and we know that because the next candle that comes out in a couple minutes starts printing red. Okay, if price can power through, then potential resistance right there. Price can get above that, then we have a nice window of opportunity up here to trade back up to the highs of the session, which are defined by the CTA. Remember, the CTA is an important price, important area based on historic price action. It's not unusual to see it get turned away like that, just as it's not unusual to see it sail through it like it did on the S&P on the downside. The short side on the Dow was 32,510. And that was right there. 32,510. So this was a huge red candle, but it didn't quite make it to the CTA. Price turned back up. So everything that happens in between those two lines, that's the market trying to make up its mind what it wants to do. Okay, here's the Russell. Okay, the Russell has obviously been in sideways mode. The long side last night for the Russell was 23.65. There's another example of price walking right up to the number, but with no conviction, leads to this move to the downside. 23.23 down here has not been touched as of yet. 23.23. Now, weekly trading zones. Price is currently at 23.50. Overhead, we have a weekly trading zone at 23.65. Now, The CTAs come out as soon as the session opens. The weekly trading zones get published. Well, they're done overnight, but they get published for our members at 6:15 a.m. Monday morning. And so, no surprise, 2365, when price approaches a weekly zone from below, we expect it to be good resistance until proven otherwise. Now the next zone below is 2345. Okay. And below that is 2331. Again, all of our traders get this information Monday morning, 6:15 a.m. Eastern. We've published the zones since December 14th of 2009. So we went from zone down to the zone where we consolidated. Only three things happen at a zone: consolidation, rejection, and the slice. Consolidation is what you're going to see the most, 75–80% of the time. Rejection is the second most likely. There's rejection, 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 rejection. You see how when the 30-minute candle closed, all that's left touching the zone is wick. So this zone has become like a center of gravity. We've been above it, we've been below it, we've been above it. Now, the next high probability move on the Russell, because we're above the BBC. Now, again, look where the market found resistance. Where the bearish cross took place. Boom. Boom. So if we can get above this bearish cross and above this swing high, then I'll put an alert in the channel. It'll be something like 2357 to 2359. Right on up to the weekly zone overhead. And Garrett, when you get here, just type a message into the chat box. Let me know you're here so I can open up your mic for you. Okay. Let's go to the NQ. Okay, these are last week's zones that you see on the NQ. Price is currently at 12,954. We've got a zone at 13,074 /05. And it's early in the week, so I'm going to make that zone from last week yellow. And from 12,825, that's last week, I'm going to make that yellow. Okay. 12,825. Now this week we have a zone at 12,924. And as you can see, that also is sort of a center of gravity for price. Been above it, been below it, been above it, been below it. Not conducive for trading. Here was the open last night. So everything you see here, sideways movement. Now we've got a low and a higher low. We got a high and we got lower highs. So I mean we could do that. And we could do that. Price will eventually, this is that side, remember price can only go up or down or sideways. We love up, we love down. We're not fond of sideways. So 1294, below that is 12,770. That's this week's zone. 12,770. Okay. And that zone has not been in, that was last week's zone. We're just going to get rid of it because it's not been important in the last couple of days. Okay. So if price can get above this trend line and take out this high, then we'll have a nice window of opportunity to the upside. If price gets below this zone, then we'll have a window here, a better window, one that I would prefer to be involved with. Oh, and I might as well point this out. This bullish cross became support. And then just get that out of the way. So that bullish cross support, and now this support has more to do with the fact that this was a swing low, but this was a swing low because the important price, important area told us to expect support there. Okay, let me check the audience because I know Garrett's coming. I think he comes in with a hot mic, but he's probably on a call, so he'll be here shortly. Okay, so we'll keep going. On the NQ last night, the long side, the CTA number was 12,985. I think I'm going to just do away with this line here. Okay, so we had a CTA at 12,985. There's that iron curtain thing again. The short side, 12,850. Yeah. 12,850. We haven't touched it yet. Okay, so we touched it here. And again, the number was 12,985. And we made it to 99, so that's 14 points at $20 a point. That's actually a $280 move. But we can see that really what happened was it became resistance. Okay. So think of it two ways. It's either going to be resistance or the launching point for a long trade up to here. Once it gets above, can it hold a pullback? And well, we see the story here. Okay, price came right down to the area where you would anticipate support, and now we're just struggling sideways. This is not unusual for rollover day. Okay, right? This is quite typical. Now, rollover day was last week, but the hangover effect will carry on into probably tomorrow. Things will start to clear up a bit. Okay. Uh-oh. Garrett just messaged me that he has a broken headset. Hang on, let me call him real quick. I missed his call. Alright, I'll hit mute here for just a minute.
Hi, Dwayne. Hey, my headset
Hey guys, Garrett's headset's broken. I've got him on speaker on my phone, so I need you in the audience. Tell me if you can hear him okay. Go ahead, Garrett. Just say something. Good morning, good afternoon.
All right, yeah. Can people hear me all right this way? I put in a new order through Amazon just this morning, and they tell me it'll be here no later than Wednesday.
Okay. Guys, can somebody give me... Okay, I got a message in the chat box. Let's see what it says. They say they can hear you. It's a little weak. Let me move the microphone a little closer. Like that.
You know what?
I think...
Maybe we should... maybe we should just try and do it Wednesday.
Okay. All right.
I do think we might be setting up, if we can get a decent rally up here and make a new high. I think we're setting up a top. We finally got to some overbought levels that with this morning's correction are going to have to kind of amp them up again. But that's all I was going to point out. We're starting to get up there where we should have a correction, and there's some pretty good Astro stuff that's in play right now. So if we can run up today, maybe there's a good place for a correction to begin. That was all I had, but I'll let you know as soon as I get that. It shouldn't be any later than Wednesday.
Okie doke. Okay, all right, Garrett. Yeah, no worries, man. Just I know what it is. I know what it's like to have your headset break. I've got
I knew
several broken ones lying around.
The cord, just the cord that goes into the bottom they just wear out, and that's what happened last night. And I just completely forgot about it this morning. I hadn't put it on, so it wasn't. I could have told you a lot earlier. I just didn't think about it.
Well,
so,
I've got one guy, John, saying, yeah, I hear him. Okay, but a couple people say they can't. So, all right, guys. I guess we'll look forward to talking to you on Wednesday.
Yeah, and I'll try. I've got a headset that I can use on my phone that might make it clear, but I've probably got to recharge that. Sure enough, I'll put it on and it'll be good for 20 seconds and it'll need a charge. So, maybe we should just wait till Wednesday, but I'll let you know as soon as I get that.
Okie doke, buddy. All right.
Okay.
Thanks so much. All right. Talk to you soon. Okay. Okay. All right. Well, some people said they heard him perfectly, but other people say not very good and barely, so we'll just postpone that. I'll talk with him on Wednesday. Okie doke. So we're struggling sideways on the NQ. Nothing high probability here because the price starts to rally. You got potential resistance here, and here, and here. And if we get below the zone, there's some area here, but not really crazy about it. So that's the story on the NQ. So now we'll go to crude as we do. And last night, the CTA number for crude was to be long 65.90. Now the open was this candle right here. Okay. And the CTA number was 65.90. Okay, so from 65.90 we had a trigger that took us up to 66.16. So that's $260 per contract traded. price got back below the trigger, found support right at the bullish cross, blue and climbing, and the BBC. That took us up to a swing high of 66.40. That's $500 per contract traded. And then we get back below the trigger here, but now we've got red and falling. This trigger and this trigger, we've got the support of blue and climbing. That's what we want on a long alert. The short alert for crude, CTA, was 65.35. And that number's right here. Okay. So from 65.35, we went down to the zone at 64.70. We got an exit signal right here. Now, the zone below is always the final trade to target. But in a situation like this, where you've got the step line on the left side of red and falling, and price is far to the left of red and falling, you might choose to stay in. But in most cases, that zone's going to probably be your best exit. So from, again, 65.35 to 64.70, that's $650 per contract traded. Now price has gotten back above the trigger. So if we get resistance at the zone here, now that's last week's zone. That yellow. I'm going to move my mic back up, kind of where it was. Maybe you guys can still hear me. Alright. So we'll make that yellow. And then 75. That is this week's weekly zone, 75/80. And then below that, we've got a this week zone at 65.20. We've got a this week zone at 64.80/85. Okay. So there you have it on crude. Now let's go to gold. And these are last week's zones. The open last night was this candle right here. There we go. Okay, on gold, long side was 17.32. There it is again. The iron curtain. 17.32. And on the short side, 17.15, which we haven't touched yet. Now, last week's zone at 17.19. Gonna make that yellow because it's still holding sway over the market. 17.19. Yep. And then this week we got a zone at 17.15/16. Remember, the CTAs come out before the zones. Because I like to get the CTAs out right after the Globex open. And that hasn't been touched as of yet. And then going to make this zone from last week, make that yellow. Okay, so there's price trying to make up its mind. Now the next zone overhead, we're at 1728 roughly. So we got a zone at 1731. / 32. Okay. So current zone, last week's zone, and that leaves just one more market, silver. Okay, and the open was right there. Okay. All right. Silver CTA number on the long side, 2629. Right there. So we had a high of 39. That's a dime. Now a dollar move is 5 grand. And so a 10-cent move's 500 bucks. So we did it once, did it twice, did it twice. Might be about to do it a third time right here. And the CTA on the short side is 25.80. Okay. And there you have it. Again, so far this week, Logic 247, as of 12 noon, 14 alerts total. Now we had 100 alerts last week. That was a really busy week. And an average week is 50 to 60. Okay. One never triggered. Well, this week. 14 issued so far, 1 never triggered, waiting on 3, 10 actionable, 2 stopped out. That's 20% of actionable, based on not risking more than $300 per contract, per trade, less when possible, based on market structure, and a simple 3-step methodology that we teach all of our traders. So with that, we'll go to our good word for the day. Friday we talked about Jell-O. We were really talking about learning to wait, and we talked about the gentleman who sold his invention, Jell-O, for a paltry sum of $700 and $450. And Jell-O now sells excuse me, over 1 million boxes a day. And the gentleman who sold Jell-O, he gets no royalties, no nothing. And he was a hard-working guy. So, we talked about waiting on Friday. Let's talk about peace today. Where can you find peace? Peace sometimes seems elusive. Psalm 29:11. The Lord blesses his people with peace. Increasing our pace has decreased our peace. There's an old joke about a stressed out personal assistant who told her boss, When this rush is over, I'm going to have a nervous breakdown. I've earned it, I deserve it, and nobody's going to take it from me. We might smile, but chances are we can relate. Not long ago, we marked the passing of time in seasons, but seasons begat monthly calendars, which begat modern-day timers, which begat one-minute managers, which begat handheld personal organizers. And what does it all lead to? As our productivity goes up, our quality of life seems to go down. An article in USA Today described how therapist Ofer Zur staged a conference called Speed.com, the search for meaning in the new millennium. And guess where he staged it? In the heart of stressed out Silicon Valley, California. As the attendees gathered, Zur noted the drawn faces, the worried looks, and the preoccupied demeanor of his audience. He said his personal alarm sounded when he noted they had brought cell phones and laptops and began using them during the session. Here's what he said about it. We've become obsessed with speed. We end up with lots of plans that we can't execute and a full schedule that can't be followed. The paradox of our time-saving tech gadgets is that we've wound up with no free time. All these gadgets designed to save us time, and what a paradox. We have no time. No time for the things in life that are really important. The things that matter, the things that are eternal. It's been said that not one person has ever been recorded saying on their deathbed, I wish I had spent more time at the office. So, in this hurry up and wait world, in this fast food microwave, I want what I want and I want it now world that we've created, where can you go to find the peace that all this stuff was supposed to bring you or give you, but didn't? Well, you might try the one they call the Prince of Peace. Today he's saying to you, if only you had paid attention to my commands, your peace would have been there like a river, your well-being like the waves of the sea. That's Isaiah 48:18. So all of our inventions and contraptions and devices and all of this new stuff has not brought us the peace we seek. So the Word of God says that we need to return to the Prince of Peace. If you had paid attention to my commands, your peace would have been like a river, your well-being like the waves of the sea. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.